Well, ladies and gentlemen, thank you for joining us on this panel today that goes around a very important and up-to-date subject that is a global economy and where are we heading. Before I introduce you to the panelists in this session, let me please first start by a brief intro so that you will be familiar on the subjects we're going to discuss. Almost 5 years since the global crisis hit, and the world economy is still struggling to recover and weather the changes. Last year, global economic growth has weakened further, and the IMF projection for this year is further slowed down to 2 to 3%. Challenges continue to threaten the future: shrinking economy and rising indebtedness in the US, shy recovery in Europe, and slowdown in China, all combined together to draw less optimistic outlook for the future of the world economy. The emerging markets led by Brazil, China, India, and Russia, or what is commonly known as the BRIC countries, used to drive the global growth over the past 15 years and accounted for more than half of the global GDP. However, these economies have been vulnerable to the constrained budgets in the rich countries and the austerity measures taken. The growth they have witnessed was closely linked to the US stimulus and bonds buying program, a relation that had put the future of these markets on the gloomy side after the Fed announced plans to start tapering. More positive forecasts are for Japan, and here thanks again for the sharp monetary easing that helped the economy. Challenges extend to Africa. However, the future growth of the African economy remains bright and shows the most resilience. The IMF forecasts growth of 5.6% for the African economy this year and quietly over 6% over the next year. Such growth, if continued, is believed to enable Africa to replace India and China as the world's primary growth engine in the future. Hard times are still ahead, with unemployment soaring to its highest levels ever, and labor force participation is getting lower. Drop in overall demand, currency depreciation, and outflows of capitals from the emerging markets, and the lack of structural reforms and clear policies. In this panel today, we will try to address the perspectives of the global economy. Where should the shift in balances lead? What did recovery policies achieve? Which economies are considered the future of the global growth? Actually, it's a broad topic. That's why we'll try to address it from 4 main angles. That is the monetary policies taken so far, the unemployment challenge, the reforms and policies needed at this very period of time, and of course the role of emerging markets. Please join me in welcoming our panelists for this hour: Mr. Yves Leterme, Deputy Secretary General of the OECD and former Prime Minister of Belgium. You're most welcome. Mr. Roland, BELLEGARDE, member of the Management Committee, New York Stock Exchange, Euronext. And Mr. Haut, ZHIRONG, Vice President of CAD Fund. And last but not least, Mr. Alvaro, ORTIZ, Chief Economist, Cross-Country Emerging Markets, BBVA Bank. Mr. Leterme, let's start with you. What can we read from the IMF projection of further slowdown this year to 2 to 3%?
Déjà en écoutant votre... voilà, en français ça marche. Already listening to your introductory remarks, I was thinking by myself that the picture is really mixed. So globally spoken, and we will issue our economic outlook we will issue it next week. You have some positive signs as far as mature economies are concerned in Japan, in the UK, in the United States, for different reasons. We have some slowdown, globally spoken, in the BRICS, with China still above 7, but with very difficult challenges in Brazil, in Russia, South Africa, India, challenges of different nature, but globally spoken, these BRICS tend to have a slower economic growth. And then you have lots of countries which are behaving quite well all over the globe, some African countries, but of course they are starting at a very low level, so the impact on the world economy is still limited. The big question mark still being the euro area, technically coming out of a recession, But also there, it's a very different, a mixed picture when you compare, of course, Germany, Austria, the Scandinavian countries with the more southern countries. And but so globally spoken, we think that 2014 could be a little bit better than 2013, under the condition that some structural measures are taken. But I can imagine we elaborate a little bit on that later in the debate or in the panel. That structural measures are complementing next year what has been now a push starting from fiscal policy and monetary policy.
Okay. Let's start with the fiscal and monetary policy. Mr. Bellegarde, the pumping liquidity and bonds buying program have been the major procedure adopted by central banks almost across the globe, from the ECB to the US Federal Bank to the Bank of Japan. First, can you please briefly give us a definition or explain what do we mean by bonds buying program so that everybody here might be aware of the procedure? And then my question is, have these policies eased or raised uncertainties in the global economy so far?
Okay. So globally speaking, the different monetary policies, it's meant to increase the liquidity in the financial markets, meaning accommodating and the requests of the different economic agents to get loans at a lower price. The theory behind it, or the concept is, if you have a lower interest rate, you can basically fund more initiatives, and initiatives that may have a lower return rate. So this should lead to growth, employment, etc. So fundamentally, technically, it's basically central banks buying back assets from the banks and allowing them to redistribute more capital and loans. Is it facilitating or is it tampering? I think, broadly speaking, short term, if you don't have an economic recovery, you will basically can pump in money, a lot of money in the economy. It's not going to create any inflation. Longer term, if the economy is recovering, if you have a lot of liquidity, which is creating a mismatch with the real economy, you end up in inflation. So probably in a simplistic way, I would say the central banks are closely monitoring what's going on. The more they can provide liquidity to the banks, for the banks to basically lend money to the economic agents, they will do. And at the end, they will see if there is enough liquidity and there is inflation, they will start basically drying up the liquidity of the financial markets. This is, again, I would say, in a simplistic way. Reality is we are all facing difficulties. The banks are providing liquidity, the central banks are providing liquidity to the commercial banks. Commercial banks do not really lend money to the economic agents. What they do is they look for the safest assets, which tends to be government bonds. They reinvest again in government bonds or basically put the money back in the central banks. So we have a kind of liquidity trap where the money is put on the market by the central banks. And on the other side, the banks, commercial banks, are not lending money to the agents and to the economy itself. So that's the dilemma we have right now. And the central banks and politicians are navigating in this environment.
Yeah. On the issue of liquidity, Mr. ORTIZ, the Fed stimulus program, speaking about the US, had so much really supported the US dollar and the stock markets. But at the same time, it's raising concern about the scenario of debt default, or the US is unable to meet its debt later on, or what has been commonly known as the bonds bubble or security bubbles. Are we to face a new form of bubble?
Well, what we believe is, you mentioned before that we have been 5 years after the crisis. The economy is still in a very fragile situation, the US, and especially the US and Europe. So we think that this monetary stimulus was first necessary. And given also, for example, in Europe, given the fiscal constraints, and it's one of the policy tools that we have to fight this depression. Of course, what happened is because of this monetary stimulus, quantitative easing, part of this money is ending up in other places, not in Europe, in the US. So part of the story is that some flows fly to the emerging market. Relative to the latest news about this, about the tapering, should be welcome, because in some sense it will mean that the US is improving their monetary policy outlook. But given to these technical problems in financial markets, all we know that the last June, the drop in the emerging markets portfolio flows was very important, in some sense pretty similar to Lehman Brothers. Fortunately, during the summer and during the fall, things are gradually improving. We believe there was a global rebalance of international portfolios. But what we think is that we will observe more volatility in the coming months, but investors already price in that sooner or later the US Federal Reserve will start to raise rates. And we should all to take into account that this should be taken like a positive news, because that will mean that the US economy, labor market, and the economic activity is improving.
On this issue, these stimulus programs, the Fed had announced so many times that it will start reducing pumping liquidity. But honestly, this has been postponed so many times because the economy indicators are still weak in the US. Are these policies really benefiting the economy?
Well, this is a key question, and it's difficult to answer because we don't know what the economists call the counterfactual. So we don't know what will be the situation without this stimulus. I'm not a specialist in the US economy, but I can assure you that if Mr. Draghi 1 year ago didn't provide this whatever it takes to save the euro, at least in my country, we will be in a very, very difficult situation. So I think that this is one of the biggest shocks that the economy suffered in the last 100 years. There is still too many things to digest, and we believe that this monetary stimulus is one of the alternative tools to fight with this situation. Surely, I think that without this stimulus, the situation will be much, much worse.
Yes, we're speaking about mainly the US because we know how much the changes in the economy there affects the globe. Mr. Haut, how far did the latest partial shutdown in the US and the standoff between Democrats and Republicans over the budget and debt ceiling put the confidence in the US economy at stake, in your opinion?
Well, before I answer these questions, I just like brief you a little bit about the emerging economies in the new balance of the global economic growth. When we take a look at the world economy, we will find the balance is changing, and as the developed countries are still in the weak recovery. Due to its own economic issues, the rising of the emergency economies such as the BRICS countries and Latin America and the Southeast Asia and Africa as well are rising. It really captures the world's attention. In these emerging economies, there are two parts are very important as I focus on. One is China. It's the largest developing countries in the world. And the other one is Africa, which is the poorest but most potential developing continent. So China, after the decades of the economic reforms and open, China has become the second largest economy in the world, just behind the United States. And in the past 5 years, China has reached 7% or 8% GDP growth rates against the weak world economy. Even last year is a little bit slower than the expectation, but it's still strong and still huge potential. And maybe you have noticed that these days China has made a serious new policies, new decisions on the economic reform and the social development. So I believe that a new stage of China economy is starting. So, but look at Africa. I must say that Africa has witnessed the fast growth as well, with a lot of vibrant developing countries such as Ghana. In 2011, Ghana's GDP growth rate reached almost 14%, becoming the world's fastest country. And Nigeria, the most populous country in African continent, is also near 8%. And Morocco is close to 5% or 6%. So I think it's the emerging economies have their own driving force. It may be affected by the developed countries like US policies, but their own driving force is very strong. It's very strong. They can choose their own development road. They can find a way to solve the problems and to get the great success. So I remember that in 2000, The Economist has a cover named "The Hopeless Continent." That means that Africa is very poor, is without the hope. But last year, they have a new cover. That means Africa Rising. I think it's in these 10 years, many developed countries have changed the policies, have changed the investment into African continent, but they still have their own development. So I believe that the developing countries, if they have their own suitable policies, suitable economic development modes, they can make their steps to the success. Thank you.
Yes. Mr. Bellegarde, we've mentioned that emerging countries are playing a very vital role in the growth in the global economy. They better weathered the financial crisis. What role are we expecting from these markets to play post the crisis?
I think if you look at these
Excuse me, Mr. Bellegarde, this question was Mr. Leterme. Yeah, I'll get back to you on the same issue just right after him.
Well, just maybe as a first remark, react on what was said about Africa. I think it's true and it's very hopeful. But I think just as in other parts of the world, we should be aware of the fact that it's not a homogeneous situation. You have some 10 to 15 countries that are performing very well, and you mentioned some, but other countries are really in the opposite situation. And so I think what's happening in some of the African countries is an opportunity we should seize and try to have other countries with it in the same flow. And there's still a lot of work to do, and I would say as far as the OECD is concerned, is a kind of top 3 of dossiers or challenges we should address. The first one is governance and stability. You named a couple of countries. These are countries where sometimes after a very difficult period of time of their history, now there is stability, there is quite a good governance, it's improving, lots of problems in terms of corruption, red tape and so on are addressed, and you see that there is a kind of economic dynamic starting. So governance. Secondly, education. Very typical for Africa is that it has a very broad demographic pyramid, and this is of course a very important opportunity. But then you have to invest in human resources and all these young people. And 3 is entrepreneurship. This will not come automatically. And the 3 are linked. You will have more entrepreneurship when you are successful in addressing the governance problems. and you will have good enterprises when the people in the countries are well educated and you invest in vocational training. And so I think these countries, the African continent, since a long time now has the chance for the first time, and we see some tokens of let's say, new dynamics, but it's a mixed picture. And secondly, it's also a kind of challenge now to transform these possibilities, these potentialities in new chances for the whole of the continent. Once again, some economies are lagging behind. As a Belgian Prime Minister, Belgian government and Belgian policy used to have special ties with some parts in Central Africa, Congo, Rwanda, and so on. Well, I can say there are still lots of problems in Congo, for instance, which is potentially one of the richest countries in the world. Well, in terms of governance, in terms of education, in terms of entrepreneurship, there's still a lot of work to do. To answer your question, what is the role of the emerging countries? We have issued a couple of months ago, a kind of forecast for the next 50 years. And what we see, first of all, once again, it's not the same situation in all so-called BRICS countries, also in terms of economic growth and in terms of potential. And the second thing we put forward is that normally the slowdown, let's say going from 7, 8, 9, sometimes 10 or more as a growth figure, this will tend to go down and to go to normal figures, but on the other hand, a more sustainable development. Some of the emerging economies will face more rapidly the problems we are facing. To give one example, we have the problem of the aging of our population in a period of 4 generations. Yeah. These emerging economies, especially the Chinese economy, is facing the problem of the aging of society in a period of 2 generations.
We come to this topic, the unemployment angle of discussion. Mr. Bellegarde, speaking about European Union, the sovereign debt crisis in Europe have so much questioned the future of the euro as a single currency. I think with the return of some healthy signs, though shy recovery signs from Europe, we're over this question now. What are the solid bases that help the survival of the euro as a single currency?
I think the fact that single currency is a key element for Europe. It's a way of having a convergence of those economies. So you cannot, when you have such a zone, an economic zone like Europe, the currency has been taken as a factor to force all the other parameters to converge. So having interaction between the different countries, economic-wise, and at the same time having a monetary policy which should be consistent. The issue we have been facing, obviously, is that the fiscal policy is completely left at each country level, and this has created some problems. Added to this, that the banking supervision has been left to different states. So a single currency, but banking supervision which has been left independently. This is being tackled now with the new banking law and regulation, which is trying to be at the European level. But if you look at the impacts, and I would like to come back on the point of Africa again, Leterme mentioned clearly governance and stability, education and entrepreneurship. All these are really the key elements beyond the population, the size of population in certain countries, or the natural resources. Each of them individually is not enough. We think that one of the key elements is allowing capital formation, allowing capital accumulation, and having a better allocation of capital to the different fields and different economies. And this means that you have to find financial markets, in my view, and not rely, like in Europe where we have been reaching the limits of the welfare state. If Africa goes on the side of the welfare state, it's not going to be the right direction. We know that this has a certain limit, which means that you have to find ways of funding the economy through capital accumulation and through more direct funding and capital markets. What does it require? Beyond governance, stability, education, and entrepreneurship. It's about having proper financial markets, well-regulated, stable markets, and a finance which is made for growth and not finance for the sake of finance. We've been talking about Morocco for the last few days, about creating a financial center in Morocco. But I've not heard anything really consistent about what is behind the word financial center. Is it just a financial center having many banks and many participants and just finance for the sake of finance, or a finance which is going to lead to growth, employment, entrepreneurship, and allowing really the capital to be accumulated and then invested for the long-term growth? That's, in my view, the key point we should, in the future, tackle, moving from a concept of admiring finance for itself and having finance serving the economy.
Okay. Mr. Leterme, do you think it's time for the well-performing emerging markets to start thinking to follow the path of the EU in terms of single currency or uniting their currency?
I think they should anyway avoid what Mr. BELLEGARDE has been alluding on. Having a currency as a kind of political project without what I would call the back office. A currency, a single currency means, and in fact, if you look at the Eurozone, there's not so much a crisis of the currency. I mean, the euro is very strong compared to the dollar. I don't know the last figure of yesterday, but it's very strong. The problem is a problem of sovereign debt, of competitiveness, and of different pace of development of the economies. So I don't think it's the first challenge they should address. I think working on their competitiveness, working on their governance is much more important than thinking about a single currency. Although, of course, at a certain moment, having a single currency can avoid lots of problems of cost and turnover, but not making the same mistakes as in Europe. I think European integration is probably the best thing that happened during the last, let's say, 7 to 80 years as a factor of peace keeping and peace building in this part of the world with what happened in the 20th century. But due to the way our democracies are functioning and due to the very difficult task our forefathers were confronted with, politically spoken, they had to do it in an order which is not very logical. And so they decided to, at a certain moment, to have a single currency, which is, I think, a kind of guarantee for the European integration. But in fact, the currency should be the consequence of an economic integration. I was at the table when we decided with 17 heads of state and government to save the Greek colleague, to save Greece, so to say, to save the euro through a very important program of, very important solidarity with the Greek government. This was a political act. This was an act of solidarity. And that Friday afternoon, we were not thinking about what is the economic logic behind it. And so we are paying a very high price for this kind of political approach of something like a single currency. And still, I think it's a very important success, European integration. But the emerging economies, I think, should do the things a little bit differently because also the situation is different.
They start with reforms and then they move to another step.
Reforms and taking into account from the start on, for instance, the need for a sustainable development. I think it's one of the main challenges China is facing now. Sustainable development means not only having very important economic growth, but also avoiding that in Shenyang people cannot breathe the air anymore, that in Beijing the cars are polluting the air, that there is no serious pension system. And so addressing these issues and having a sustainable development also from the environmental and natural resources side and also from the point of view of social cohesion, I think is really key.
Yeah. Coming to the issue of unemployment, Mr. ORTIZ, this has become really a very serious issue with unemployment soaring to as much as 25% in Greece and Spain, 11% in Italy and France, and around 7 to 8% in UK and the US. How can governments meet such challenge while continued with their constrained budgets and measures that result at the end by shedding more public sector workers and hindering the private sector from hiring?
Well, I think that all of the politicians in my country are still thinking how to solve this important problem. As you mentioned, there is some contradictory issues that to fight unemployment and at the same time increase fiscal consolidation. Let me say that there were no options once the bond markets get you at the heart of the hurricane. under the radar. So at first, what we have to do is just to solve this sovereignty problem. But of course, after when the countries start to end up their fiscal programs, I think that there is an urgent need in Europe to start within a growth agenda. That means competitiveness. I have to say that crisis is also an opportunity. For example, in the case of my country, reforms, labor reforms and product market reforms that 3 years ago were unthinkable to happen, unthinkable. They happening in a matter of 2 or 3 months just because of the crisis, because otherwise it would have been impossible. So I think that crisis means also change, and we should take the advantage of this change to take this measure, but we don't have to forget that sooner or later we will have to face also the growth agenda in a world where the emerging markets are gaining share. This year, 2013, will be the first year in which emerging markets are half of the GDP, will support half of the world GDP, that the competitiveness pressure is increasing, that we also face some important structural problems as aging. Of course, the population in the world will moderate, but it will do very fast in some of the countries in Europe, not only in Spain, but also especially in emerging, in Central and emerging Europe. That the competitiveness from the emerging markets, which is a good thing, is increasing and putting pressure in Europe, and that Europe has to find their own way and to build up a growth agenda, increase competitiveness. There are many things that we were talking, and probably my colleague at the OECD knows the Lisbon agenda. We have been talking around these things like 25 years ago, since 25 years ago. Lisbon agenda, Lisbon 2, Lisbon 3. But at the end, the result of do nothing was the international the crisis, the problem. So first, take the advantage of this crisis, take the advantage of this opportunity window. But then, after 2 years or so, start with the growth agenda more seriously than we did in the past.
Mr. Leterme, you have something to add on this.
Well, I fully agree with what Mr. ORTIZ said. I would just like to add that as far as we are concerned, we would like to point out that there is a kind of false debate, and this will be a kind of debate in the upcoming European elections we can feel, between austerity at the one side and fiscal policy, tightening the budgets, tackling deficits and managing the debt and so on. And on the other side, let's say a Keynesian approach, relaunching the economy. Relaunching the European economy is not always a question of supplementary expenditure. There are a lot of measures to take to strengthen the European economy that don't really cost a lot of money, that do not really need supplementary expenditure. For instance, we are talking since '92, it was an achievement of Mr. Delors, we are talking about the internal market, where there are lots of parts of the European economy, European markets, or European economic activities, which are not really at this moment taking place in a real internal market. You cannot say in Europe that there is a real one single internal market for energy products, for instance. Even telecommunication is split up, transports, and so on and so on. There's a long list. I think it's Commissioner Barnier, one of the commissioners, has a file with all kinds of measures which could be taken to really build up an internal market. Take the labor market. We have a youth unemployment rate in Germany of 7.7. And in the southern part of Europe, it's approximately 40–50%. We have a lack of mobility on our labor market, for instance, and I could go on. I remember when we were holding the European presidency, we have been trying to solve, and I had to visit Spain and Italy and so on to convince the colleagues, the problem of the fact that when you invent something in Europe, that until maybe 1 or 2 years ago, you had to go through the administration of 28 member states to have a patent. The European patent there was not even a single European patent 20 years after so-called internal market was established. So there are a lot of measures to take which do not cost a lot of expenditure, and I would like to warn for the false let's say, antagonism, which is politically spoken built up. And with the campaign coming, it will be one of the central issues. Some people advocating more expenditure to relaunch the economy, and other people sticking to the fiscal policy goals to limit the deficit. There is a way in between. Of course, when you talk about, let's say, relaunching big infrastructure programs, high-speed trains, energy markets, pipelines, and so on, then you talk about expenditure. But Europe cannot deliver this. Europe is, as a budget for the European Union, it's a maximum of 1 GDP point. When you subtract, when you take out of the European budget all the compulsory expenditure, you end with the price of Europe, the expenditure of Europe being something like the price of one pizza a year, something like 15, 20 euro, which is spent at the European level. The European budget is a very tiny little budget, and so people cannot await from the European Union that it relaunches the economy. There is no money for that, but on the other hand, there are lots of things to do which do not cost, which are not necessarily through new expenditure.
To add another point that Mr. ORTIZ mentioned about the emerging markets, a better growth rate in the emerging markets are allowing businesses to expand more their workforce. But do you think this might be hindered by a lack of skilled workers, or what we may call talent shortage in these markets? Mr. Leterme.
Yes, of course, and when we were talking about the fact that in terms of BRICS and in terms of economic growth that the picture is mixed, it's clear that, for instance, a country like Brazil, but also partly India and certainly also South Africa, the economic development, the growth in Brazil, for instance, is hindered at this moment because there is a lack of enough skilled labor force. And so it's crucial. I think with the way the world economy is developing itself, with the global value chains and with the part of knowledge which is growing importance in products and services, it's very clear that education, vocational training, the quality of your human resources is key, and it should be the #1 priority for all governments. Skills are the currency of the future. And so in lots of countries, due to all kinds of reasons, the educational system, the attendance to the educational system, the way people participate or drop out of the educational system is still a problem. And so it can hinder economic development, certainly. Yeah.
We come across the issue of population aging. According to OECD, that the population aging will be rapid, especially in Asia and Europe, over the next 50 years. In parallel, the working population will decline by around 9%. Speaking about China, Mr. Haut, you're facing this problem. It's a real problem for China. How can this affect the growth in your economy, and any procedures you're taking in this regard?
Okay, first of all, I'd like to add a few words about Africa. I agree that Africa has its own problems, such as the stability, the education, and the entrepreneurship. But if you look at the statistics of last year, out of the top 30 world fastest country, out of the top 30 world fastest country, 16 of them are in Africa. And I've heard that an international institution said that Africa is on the brink of the economic takeoff, much like 30 years ago, China 30 years ago, and India 20 years ago. So if you take a look at the Africa continent as a whole, I believe that it's a huge potential, and Africa could play a more and more important role and in the next future, and it would be a very important balanced force in global growth. And talk about China's economy. Yes, China has a lot of problems in its economy and are facing a lot of challenges. As I mentioned, that's the pollution air in Beijing and environmental protection, and also the the growth rates are slowed down. But as I mentioned before, China has a huge population and insist on the reform and open and have made a lot of things. And in these recent years, China has done a very good success in the industrialization and urbanization. Of course, this makes the hundreds of millions of people become rich than ever before. And so I think the problems in this development is the fact. But this kind of the problem could only be solved by the development. So if you look at the back of the Chinese development history, a lot of problems has been solved, but there's new problems occur. That's the developing. That's a developing process. So I think as China, the emerging economies can provide a sustainable driving force to the global economy. This driving force comes from the capital, from the market, from the labor. And first, the capital, the investment. It's not only just because China is still the largest foreign holder of the U.S. Treasury, but I think the developed countries have witnessed that in recent years, they have witnessed that more and more capital inflow in the recent years rather than the capital outflow in the past. And the market, the emerging countries has a huge market. We can see all of the high-tech products such as the smartphones, tablets from the United States, and also the luxury goods such as top brand watches, clothes, bags, and wine from Europe. Their market shares are really booming in the emerging countries. And the last one is the labor force. The emerging countries has a huge population, and they provide a very cheap labor, can provide support to the industry restructuring of the developed countries. And when we talk about the great success of Apple, I think the contributions which thousands of Chinese workers have made should not be ignored. So I think that's the developed countries and the developing countries can work together to make the new balance of the global growth.
Yeah.
Thank you.
Coming to the issue of entrepreneurs, Mr. Bellegarde, boosting this sector and helping this sector has been a major call, and we always hear this call that there should be investment in real economy. How can we talk about supporting the sectors while we have troubled banks and we're continuing with constrained budgets? Who will offer the support for this vital sector?
I think it's a very important question, and it's not an easy one to answer, because we can say a lot about it, but it's very hard to make the shift. What you realize over time is that economies like in Europe, they have been gradually moving from, I would say, pure entrepreneurship to something which is more based on states helping, and welfare state, which is a nice way of amortizing the crisis, which is very good for democracy leading to this point. If you look at the emerging markets, you have, I would say, two models. You have the China model, which is a centralized capital allocation, highly probably efficient in a certain model. And if you look at the other BRICS, and if you look at the MENA region, outside of the Gulf region, it's basically left to entrepreneurs to try to build and to try to invest. But the capital allocation is not really something which is thought through. So you will have banks providing loans mainly to already established oligopolies or monopolies in certain countries. But then it's about financing growth or small and mid-sized companies. Then no one wants to take the risk. So you have a lot of ideas, a lot of entrepreneurs, but no way of having funding. So I guess the key point here is to try to move from this model beyond what has been mentioned earlier, which is education, which is a key pillar for sure. But even if you have well-educated people, a lot of natural resources, a very large market, if you don't have an efficient capital allocation, which leads back again to the same question, an efficient internal market, a way of basically allowing goods and services to flow in a country efficiently, you cannot really expect growth, fundamentally growth. It will be a balance between a centralized decision, hoping that decentralized decision is efficient with a long-term vision, or individual initiatives that are not going to lead anywhere. We think, at least personally, I think that if you want to have this capital allocation done efficiently with a lot of small entrepreneurs, which are probably the main origin of growth and employment. Don't forget that in the MENA region, you have the unemployment rate is quite high. We all talk about potential growing economies, but the unemployment rate is very high. It's nothing to do with the Brazil or this kind of country. It's around 20 or 25%. I think you need to build sound regulation. What do I mean by sound regulation? It's a regulation which is going to be open for the investors, a regulation which is creating trust and stability and certainty. And as I said, financial markets should be there to create the efficient allocation of capital to the right companies. Again, when you invest, there is always a risk behind it. And people tend to confuse a risk with the idea that if you invest on the financial market, it has to be a safe environment. Every single company has risks. So you cannot, there is no risk, there is no reward. It's impossible to have this paradigm solved. So I believe that having a sound financial market, sound regulation, with the clear objective of having financial markets servicing the economy, the real economy, it should be leading basically to this growth. It will take years, it will require education, it will require long-term education, financial literacy, and sound institutions. As I mentioned earlier, you mentioned the single currency in Europe, but as I said, the back office was not done. I mean, it's nice to have a single currency, it's nice to say that we're going to have an internal market on the financial markets, but all the rules, the laws, the bankruptcy laws across the different countries in Europe are not harmonized. It leads to fragmentation, and an inefficient fragmentation. It's not a fragmentation coming out of just the pure competition. It's a fragmentation coming out of inefficiencies. And in any emerging market, we should be avoiding this situation. It's good to have competition. It's good to have then some fragmentation, but making sure that we have the right framework for this to lead growth and employment.
Mr. Leterme, what about the emerging markets? Are this sector, the small to medium businesses, being backed enough or are playing the roles they're supposed to play in driving the growth in these economies?
Globally spoken, because it's always difficult to generalize. Once again, there is a different situation in each country, but globally spoken, we think there is a development of enterprises and there is entrepreneurship, but it's the situation is really different from the one country to the other, and you have at least 3 to 4 elements which could be subject for improvement. It's the whole of the administrative procedures people have to go through to start an enterprise. In some countries, one would be very surprised about the red tape, the bureaucracy, and so on. Even when officially spoken, the government promotes enterprises. When you look at what kind of procedures people have to follow to fund an enterprise, you would be surprised. Secondly, and this is a problem which is common also with developed economies, is the access to capital. Sometimes to launch a new enterprise, a small enterprise, a micro enterprise, you don't need that much money, but still it's unaffordable for lots of people to start their project. And where in developed countries the problem is that banks still need money to address the problems of the non-performing loans or the balance sheets that still have to be addressed, some problems in that field. You see that in other countries, emerging economies, let's say the interaction between the banking sector and the people in the country that really want to launch something is missing. A third problem is, but I think you have a panel on this later on, is financial education. There is really a need to educate people about financial products as a consumer, as a normal citizen, but also as someone that wants to ground an enterprise. So to sum up in an answer to your question, I think lots of governments are launching programs to address the problem of the access to finance and to diminish the red tape, which is needed which you have to overwin to ground an enterprise. But there's still a lot of work to do, at least in these three domains.
Speaking about the global crisis, of course, this crisis has led to the consumers and the governments to tighten belts. Mr. Haut, speaking about China, the second largest trade partner to EU and the third largest trade partner to the US, how far did the lack of global demand because of the crisis affected the growth in China?
Actually, in recent years, China export became weaker just because the world market changes. But China is trying to find another way to solve this problem. Firstly, China has to issue a lot of new policies to increase the domestic demand and to provide a better social security, and Chinese people can willing to spend their money, not instead of saving in the bank. And second, China is encouraged the Chinese companies to invest in abroad, such as Africa. That's why the Chinese government set up the China Development Fund, Africa Development Fund, to support the Chinese companies to go abroad, go to Africa to doing business there. That can make a great exports. And I think it's a quite good way to balance the domestic demand and the exports. So. Based on my experience, that China and Africa are quite similar. We have similar economic structure, developing stage, and also the comparative advantages. So China and Africa can work together to solve the emerging countries' problems. Not only it depends on the developed countries.
Yes. I think we still have 10 minutes to address the issue of reforms and structures needed. Mr. Ortiz, the main concern now is how to stabilize government's debt to GDP. What policies are needed to be adopted to ease this concern?
Well, I think that depends what country or what area are you talking about. If we, for example, if we talk about the US, you know that they are still under ultra-loose monetary policy, and fiscal policy is somehow a way, but at some moment in time should be addressed and should be corrected. We think that there is still margin, but not too many, as some analysts could think. For Europe, I think that is the opposite way. So most of the focus was initially, we are still under support of the ultra-loose monetary policy by the central bank, but we initiated the fiscal consolidation process before, but to correct the dynamics, this is not enough. At the end of the day, debt dynamics or debt levels are corrected with growth, and without growth, in a stagnant situation, it's going to be very difficult to correct debt. So they have different trajectories, and they are still with different things to do. In terms of the emerging markets, what I should be mentioned today that for the first time in this crisis, emerging market risk is apparently lower than developed ones, and this is a really good thing. The resilience that we observe in the emerging market during this crisis, I think, is a real surprise. Maybe the other patterns of the crisis could be not forecasted but anticipated somehow in the developed market. So what they should do, the emerging markets, I think that we talk a lot about the reforms, but I think that the key success for the reforms is to work during the good times. Because under the stress times, it's very difficult that these reforms get finally success. Of course, the crisis opens opportunity windows. So I think that the lesson for the emerging markets is that they should work now, that they are not under stress during the good times. But we still believe in the business cycles, and the situation can change. We are not thinking about this immediately, and this is better to work now that you have the margin to do things, to elaborate things, to improve institutions, to maintain very low levels as they have now of debt, public, private, and external debt. What they should do. This is my recommendation.
Mr. Bellegarde, on the banking sector and financial sector, what are the changes and policies needed at this very period of time?
You mean on emerging markets or globally?
Yes.
On emerging markets. I think, again, as mentioned by every panelist, it's very broad picture, so every single case is different. But broadly speaking, the condition would be that we have a stable regulatory environment and a safe regulatory environment, and a gradual, I insist, a gradual opening of the financial markets. Because everyone would say we should open the market to all foreign investors, everything should be fluid. I just want to remind everyone that even for European integration, before getting to European integration, every country in Europe had an exchange. Every country in Europe had centralized its exchanges, centralized its infrastructure, created stability in each country before opening up and having more interaction between the different participants. So I would warn that having a proper regulation, stable, secure institutions, at the same then gradually opening to foreign investors, foreign participants, foreign banks, gradual to allow local participants, local players, local stakeholders, local financing agents to be able to perform locally. If you just open to foreign participants and foreign banks, they're going to perform the highest return. They're just going to look after the largest companies. They will never look after the small and mid-cap companies. So they will never fund the smaller companies, unless at a very high rate. But the local participants are probably the ones which are going to look more after the local economy. This is something which have been featuring in Europe. When you look after, let's say, 5 years of European competition on financial markets in this internal market, we have realized that we are leading to, but we are not there yet, to eventually a two-tier market. Large companies, blue chips, highly specialized, centralized market on funding the large companies, and then a local companies, domestic companies, which are remaining mainly domestic. They will never become pan-European, and they're mainly funded by local participants. So the same risk may exist on emerging markets. If you have local participants and local companies, you should make sure that you have a local champion somewhere, more than one, to make sure that you can then gradually open your financial markets with a regulatory environment which is stable, secure, up to the normal standards, and then you can gradually find a way of having a proper capital allocation to finance growth.
Mr. Leterme, on the governance side, what policies are needed and how important is the issue of cross-border cooperation and integration between markets?
I would say not only integration between markets, but also between policies. I think we have 4 problems to face from a global point of view, and I will come to the governance need. First of all, there's still, for some economies, the problem of the sovereign debt and deficit to address. And there has to be a sustainable, credible path of reducing deficits and managing the debt. This is the case especially for the Japanese economy. This is a US case. They have to find a solution for the every 3-4 month deadlock discussion. But first of all, the public finances, put them in order. Secondly, and this is specifically for the euro area, the banking union dossier, credibility in the financial sector is really key. Thirdly, for most of the economies, there's a problem of competitiveness, especially the European economies, but also some others, some of the BRICS economies. And last but not least, and we haven't been talking a lot about this, but we should not underestimate that you have a public finance crisis, you have a banking crisis, you have a crisis of the economy, impact on the real economy, but the social aspect of the crisis is really key. And this is putting not only our social security schemes under pressure, the fact that there is very high unemployment and so on, but also the sustainability of our political system and of our market economies. And so, last but not least, we really should address with much more active policies the problem of unemployment. To answer your question, the problem of governance is, for instance, tackling in a decisive way the red tape, corruption. In lots of countries you can't really have a boost of the economic activity just because corruption, red tape is hindering all kinds of efforts. In the field of global governance, I would say that we really need breakthroughs in terms of strengthening the free trade agreements. It's of course Doha is almost dead, so to say, but we really need an expansion of free trade. We have to have the good level playing fields to address 2 or 3 major issues with which we are confronted. Sustainability from an environmental and natural resources point of view, CO2 emissions, the COP, 19 for the moment, issue. And last but not least, and this goes back to financial markets, for instance, there is a G20 decision to address the issue of fair taxation. We had a whole generation of treaties to avoid double taxation. Well, it has been key to develop international trade and develop international investment, foreign investment. But this kind of approach has led not to avoid double taxation, but to no taxation. And so I think it's important also if we will have, if you want to have a sustainable financing of our welfare states, and then we have to discuss what size this welfare state has to have. We really need more stability in the resources, resources also coming from economic activity. And there I think that the dossier of what we call in our professional work, the base erosion and profit shifting, multinationals having enormous activities all over the globe, like Starbucks, Google, and so on, and nearly paying nothing as a taxation, or for instance, the Virgin Island being one of the top 4, top 5 investors in China. This kind of abnormalities we have to tackle these, and so in terms of governance of the world economy, finding a level playing field for the environmental problems, CO2 emission, to tackle this has to be tackled. And on the other hand, for instance, in a dossier like taxation is also key.
Mr. Haut, in a more globalized economy, business expansion is no more a one-way street. That is, it's not only rich businesses and mature economies are looking for expansion opportunities in emerging markets. Now we are seeing the other way around, that cash-rich businesses in emerging markets are also considering expansion opportunities in mature markets. How can this trendy, a healthy trend be activated in terms of structures and reforms? So, repeat the question. I mean, this two-way business expansion between emerging markets and mature markets, how it can be activated through appropriate reforms and structures needed?
Yes, I think as emerging markets could affect each other And I just give you an example of China. China is a huge emerging market, and China and Africa cooperation can generate a new demand of their own developments in their own development process. I think China can provide the suitable technology and the products to the African market, and African market can provide China a lot of like the materials, raw materials, and also the agricultural products, and this can be matched together to help the China market to be more healthy, and at the same time the Africa market would be gets the suitable support from the developing markets rather than rely on the developed countries.
Before we open the floor to Q&A, I have one common question for you all to end with. I appreciate it if you can answer with only 1 minute. I will start with you, Mr. Leterme. Can we talk about gainers and losers in this period of changes in global economy?
Well, relatively spoken, I think the euro area is on the side of, some of the euro area countries are on the side of the losers, losing momentum, still some economies being in recession. And globally spoken, some of the emerging economies are clearly winners. But I stress the word relatively spoken in terms of when I talk about the euro area, because I think in the future we will still have very important economic activity in mature economies, but it's clear that other economies are step by step developing in a quite impressive way, and that they are joining, so to say, the more mature economies in terms of wealth, and I think we only can be very happy about this, but don't underestimate the very long period it still needs to have these economies in a same position in terms of wealth as mature economies. We were talking today about the very positive developments in Africa, but sometimes it's about economic growth and growth of GDPs per capita of a couple of thousands of dollars. And so you still will have decades, decennia of very high growth figures to be, let's say, at a level of a mid-size or average country of the euro area or developed economy.
Mr. Bellegarde.
I would very much concur. I think there are no really winners or losers. All the economies are more and more intertwined. And the different steps where those economies, the emerging markets and the developed economies are, there's a big gap, still a big gap. Yes, this gap is narrowing, but again, the world is quite rational. The European economies, the US economies, they're going to react, they're going to change. This is forcing them to change. No one is just going to slow down and step back forever. It's a shock, it's an external shock, and it's a structural shock. It means that now we see emerging markets from Asia and gradually from Africa growing. Still a lot of time and a lot of investments to be done. And the European economies are realizing that they need to change. They need to change their welfare state. They need to change the way they have been acting. And they are doing those changes. And fundamentally, yes, there are links between emerging markets and Europe and the Eurozone. But if you look at the investments and the exchanges and the flow of goods and services, 70% of the flows are in between European countries. Huh? So they are already interdependent between Europe. They are not dependent only on emerging markets. And I think at the end of the day, we need to find the right balance between growth, which is driven by consumption, versus growth driven by investment. And the balance will be always there in between the two sides. But I'm very confident that this will evolve positively on both sides.
Yeah, thank you. Mr. Haut?
Yeah, I'd just stress that even the emerging economies has its own challenges at this developed stage, and emerging economies will play a more and more important role in the new balance of the global growth. And especially Africa has a huge potential. But how can these 54 countries in Africa keeping develop? I think they have such a lot of countries. They have different culture, different people, different political system, even different advantages and disadvantages. So I think that every country has its own development modes. Simply copy the development mode from the others doesn't work. So I should say that every country has its own characteristics. It can make their own decisions to choose a development way to create the new success.
Thank you very much. Mr. Ortiz.
Well, for the short term, in which the fragile economic activity still persists and probably financial volatility will persist also in the short term, I think that the gainers will be the well-managed economy with positive underlying trends and fundamentals. That will be the emerging market with low degree of integration in the financial market. Maybe the bigger emerging market will suffer some volatility from the emerging markets. And the loser will be the economies still under the leveraging process as the European ones, and bad managed and financially integrated emerging markets. For the midterm, I think that the gainers will be the emerging market with these positive fundamentals, with positive trends in urbanization, agglomeration, population, middle classes. I think that the center of the gravity will move to the Pacific area in this sense, to the emerging markets. And the loser could be also the emerging market facing bottlenecks that will be unable to cope with. By bottlenecks mean the labor market, infrastructure bottlenecks, so countries with low fiscal base will unable to challenge this infrastructure challenge and so on.
Thank you very much. Well, I think we're ready now to your answers and contributions. Please introduce yourself and state if you're directing your question to one of the speakers. Yes, please. Yes?
Hi, Dr. Nali from the Center of Peace and Development in the Mediterranean. As we are talking about the balances shift around the world, I have quite like 3 questions, easy to answer for you, I'm sure. How do you see the impact of the FTA, free trade agreement between Europe and the United States, despite the fact that the euro currency is too strong, as well despite the rising voices in Europe to lower the euro? The second one is the interest rates in Europe, which is still very high. The second one, do you think that Europe should practice the same vision or approach in Africa like the United States and China? And my last one is, do you think that Europe still open to have
These are 4
newcomers?
questions, actually.
Yeah, three questions were. So.
Okay, we start with the first one, impact free trade. Who would like to answer this question, Mr. Leterme?
Well, if we all answer one of the 3 questions, we will have a good allocation of talent and time. Yes, the FTA is important. I mean, it's free trade for developed economies. It's chances to sell goods and services. And certainly between 2 mature economies like the United States and the European Union, not so much in terms of tariffs, of course, but in terms of non-tariff barriers. There's still a lot of work to do, and so I think would be very positive if there could be a free trade agreement. I remember to have underwritten the free trade agreement between the European Union and South Korea. Was a lot of resistance when we discussed this at the level of the European Council, but when you see now the figures, even only after 1.5 to 2 years of implementation of the free trade agreement, it is very clear that it's a win-win situation for both partners. And certainly when it comes to FTAs between two mature economies like the American and the European one, I think it would be really very positive, and I hope that notwithstanding all tensions and incidents of the last weeks, that the colleagues will be successful in striking a good deal, a good balanced deal in a foreseeable period of time. It takes a lot of time, but it's very useful, productive, and important, I think, for both economies.
Yeah, the interest rates, Mr. BELLEGARDE.
I think it's an interesting question. Are the interest rates in Europe high? I would say they are...
It's at the lowest, actually.
They are at the lowest today.
0.25.
But the question, I think, is are they low enough to allow investments? Reality is that when you invest, you always have to compare the interest rates, basically, that you get from a loan on the bank versus the return you would get out of your investment. And today, they are low, but it looks like no one is investing because the return expected out of any investment you would do to build a company or build a business is still lower than the interest rate that you have today. So it's a kind of paradigm. It creates a lot of money in the financial markets, but it creates this negative effect where the banks are basically buying back assets and putting back the money in these central banks. So it's from an economic theory point of view, it's a difficult situation. It's not understandable, but you cannot claim that they are high. They are low, but not low enough to allow investment, which means that there is another reason why people are not investing.
It's time for what kind of investments to benefit from these low rates of interest rates and from weaker competition conditions, if we can say, compared with other stronger economies?
Yeah, the return expected in the European economies is too low. So, and probably the economic environment, economic attitude, and people are not willing to take that risk versus just keeping their cash in banks or in accounts that even probably could be negative sometimes.
Okay, we can take another question. Yes, please, lady.
Good afternoon. I'm Majesté, representing the CMD from our National Business School of ZHIRONG. So my question would be addressed to Mr. ZHIRONG. Should the economic progress and development experienced by emerging countries actually be attended and accompanied by an internal social evolution beyond the consumption factor?
May I have a question again, please?
Repeat the question? Okay. My question was, should the economic progress and development experienced by emerging countries actually be attended and accompanied by social internal habits evolution beyond the consumption factor?
Should social and economy reforms, let's say, or work hand in hand together?
Absolutely. I think it's when the country developed, they are facing two issues. One is the economic growth, and another one is the social development. So that's why China is facing a lot of challenges. But when the country develop, they have to do things one by one, step by step. That's experience of the developed countries in the past. So I think the country making decisions, when they're making decisions how to provide, how to improve their economy, they need to consider a lot of things. And I think it's development is the most important thing for the country. If you are you're in a very low stage. And after you get better, next stage, you can solve the other problems of the social development. That Mr. Deng Xiaoping in China said that's why the development is the most important thing. Thank you.
Yes, please.
Thank you. My name is Sulaiman Jidi, and I am a student from the School of Governance and Economics of Rabat. So actually, I have a very specific question about for the emerging economies. We have been at many conferences and talking about China as an example with its 2 digits growth. And actually, do you think that for China, and as I have heard so far, that China today is a country which is very efficient in terms of rationality and economic development, but do you think that China really today deserves to be an example for emerging countries? As far as I know, China is in a situation and is located in a place where there are a lot of tensions with countries such as Taiwan, such as South Korea, and North Korea are concerned as well, and Japan. China is now in a country which is actually, I think, reliable in terms of to trade with so far, or to establish strong I would say economic ties, because we don't know when and to what extent this region could be a stable one. This is the first point. The second point is, do you think really that China is an example today for the emerging countries as far as the cost of labors there are very low, where countries and other emerging countries are really doing a hard job in order to rise the labor costs because we are respecting the social conditions of our workers? Do you think that China today is an example, as far as we know that the conditions of human rights and children's rights also are relatively not that respected? So I would say, is the economic situation and the international economic situation today fair? And could we say that the economic situation today, does it really pays back the right reward to the emerging countries or only to some countries? And thank you.
Yeah, Mr. Hu, I think this is directed for you. Too many things to address.
Okay, thank you. I think we all have seen the great success of China in recent years in terms of the economic growth. And you have mentioned that there are a lot of problems of China. I think China's success is depend on the strategic decision we've made by our leadership. And in this development process, we have done a lot of things to balance the economic development and social development. And is this a model or is this an example for the other emerging economies? As I mentioned before, every country has its own situation, has its own culture, people or political system. So every country has to choose your own road by your people or by your government, and to find your own way. So I think it's to make people healthy, wealthy, and more enjoy better infrastructure, better human rights is a common goals for the countries. But the goal is the same, but the path is different. So I think the other countries cannot just simply copy the mode, but it can learn from each other. So that's why I say that every country can work together. I've learned an African proverb that is, if you want to work fast, work alone. If you want to work far, work together. Thank you.
Yeah, thank you very much. I'm sorry, we have to stop here because we already ran out of time. Thank you for all the panelists for your contributions, and thank you all for attending.